Did you know that arbitrage trading is one of the most profitable forms of trading, both in the bull market as well as in the bear market? If you are new to this channel, welcome to the Brutal Investor channel. I am the Brutal Investor and my goal is to make you guys rich, brutally rich. So if you're here to this channel for the first time, please hit the like button, subscribe for more videos and ping the notification bell so that you can get awesome content like this on YouTube. So let's get started. So if you're trying to make money in the bear market or the sideways market as we are here right now, you can use a technique called arbitrage, which is basically buying a commodity or a stock or a crypto asset in one exchange at a lower price and then selling it in another exchange for a higher price to profit the gains. So this is basically the simple gist of what arbitrage trading is. And if you want to learn more about arbitrage trading, CoinMarketCap is the best place for you guys to learn about what crypto arbitrage trading or arbitrage trading in general is. And you can go to their Alexandria page and learn more about arbitrage trading in the dedicated section right here. And this will help you understand more about what arbitrage trading is, what are the risks, what are the benefits, and what are the typical profits that you can expect to make in a volatile market like cryptocurrency. So in this video, basically, we're going to talk about crypto arbitrage trading and two basic methods by which you can do crypto arbitrage trading yourself. The first one is a manual method, and the second one is we're going to use a DApp or a decentralized application on a blockchain in order to do arbitrage trading. But these two methods are just basic methods. There are tons of ways you can do arbitrage trading. If you are a savvy developer and you know coding on blockchains like Ethereum, Polygon, Arbitrum, and so on and so forth, you can actually do arbitrage trading by creating your own bot. You can use bots on Telegram or Discord or on Twitter in order to do arbitrage trading. But this video is going to basically cover a basic manual method of arbitrage trading as well as another method which is going to use a decentralized application. So stay tuned for that. So if you want to do arbitrage trading the manual method, all you need to do basically is decide which crypto you want to select to do arbitrage trading. So this is going to be a very slow and relatively inefficient, but at the same time, it can give you some experience on how you can do arbitrage trading as a beginner, right? So the first step is basically to open CoinMarketCap's page. CoinMarketCap's page is basically a really good resource to find information about multiple different cryptocurrencies, regardless of whether they are on a particular blockchain or not. And you can see several exchange listing informations as well as different trading pairs, as well as relatively accurate price information for a particular cryptocurrency in many different markets. So CoinMarketCap is the first place you need to go. And on CoinMarketCap, you can basically select a cryptocurrency. In this example, I've selected Bitcoin because Bitcoin obviously has the most noteworthy naming in the cryptocurrency space, and you can basically find Bitcoin in pretty much every single exchange out there. So in this example, you're going to choose Bitcoin, and when you go to Bitcoin, you basically see all the information about Bitcoin on the top page of CoinMarketCap's page. You just need to scroll to the bottom and search for market section, which is where you can find the different exchanges where you can find Bitcoin, right? So when you select markets, you basically see a list of different exchanges where you can buy Bitcoin from. All you need to do is you need to make sure that you filter out the different trading pairs, because Bitcoin, being a big cryptocurrency, is available in multiple different trading pairs. You want to basically filter it out in such a way that you are only going to be trading it in a stable coin like USDT. There may be other trading pairs available as well, but if you're trying to trade Bitcoin with a non-stable coin trading pair, you will have to bear an additional risk of price volatility of both the coins, right? So let's say, for example, if you're using Bitcoin and you're buying it with another coin like Ethereum, Ethereum is volatile in and of itself. So when you try to trade with Ethereum, you will probably make a less profit or maybe even slightly more depending on the market conditions for both Bitcoin and Ethereum. So please bear that in mind. So as I said, use a stable coin trading pair. Typically USDT is the most commonly available stable coin on any exchange out there. So we're going to basically select USDT, and as you can see, once I've selected USDT on the markets page, you can see all the different exchanges that provide Bitcoin trading pair with USDT. Obviously, the most noteworthy ones are Binance, KuCoin. You have Coinbase, Bitfinex, Kraken, and if you scroll further down, you can see tons of other exchanges that provide this trading pair, right? So now that you've done this part, you can basically see the price column, which provides you with the relatively accurate price point of that particular coin in that exchange at the given moment. So you can see that this this time Bitcoin is being traded at $16,841 on Binance, but it's getting traded at $16,839 on KuCoin. And if you scroll further below, you can see it's traded slightly higher or slightly lower depending on whichever exchange you choose. So this is one way of identifying price differences. So all you need to do is make sure that you buy Bitcoin in one exchange. Let's say you are buying it in KuCoin in this example, and then you can sell it on Coinbase or Binance and then make a small profit. So let's say, for example, if you can put as low as $100 and then start doing this trading manually from one exchange to another exchange, but bear in mind that you will have to pay withdrawal fees. Some exchanges may have a deposit fee as well, and obviously you'll be paying the trading fee. And once you factor all that in, you can basically expect to make a small amount of profit depending on how much capital you put into, right? So this is the basic and the manual method, which is going to be obviously tedious, but at the same time it gives you some idea of how you can understand how different markets trade Bitcoin simultaneously. So this is one way by which you can do arbitrage trading using your currency and make some profit if you are lucky, right? So some of the pros and cons of using this manual method is, obviously the pros is you can control which currency you want to basically trade. You don't need to have any technical knowledge. You don't have to know coding. You don't have to depend on a programmer or developer to develop a coding for you. You don't need to know any technical knowledge about a particular smart contract, because no smart contract is involved in this. You are the smart contract because you're basically doing the smart contract function manually by buying it low and selling it high in one or many exchanges, right? So this is basically the main pro. You don't really need a lot of technical knowledge. And another benefit is that you can do this for any cryptocurrency. You can, you're not limited to, Bitcoin or Ethereum or let's say even Dogecoin, for example. You can do this for any cryptocurrency as long as you know that it's at least listed in 2 different exchanges and the price is making sense, right? So let's talk about the cons of this method. So cons include, the first one is it's a manual method. So it's a lot of time and effort involved in that, and usually when you see the price on a platform like CoinMarketCap, you may not necessarily be able to lock on to that price because the price keeps fluctuating from on a every second by second basis, right? So when you try to buy your money, your tokens onto a particular exchange, you may probably end up losing that opportunity because other people may have already traded that and taken advantage of that arbitrage. So that's the problem with manual method, because you need to be really fast in order to make money from a manual arbitrage trading, right? And the second thing is that the second issue with arbitrage trading is that it's not really efficient in making a huge profit. So you won't make a ton of profit right away because it takes time, and at the same time you may have a lot of failed trades before you can make a good profitable trade, right? So you have to it's a kind of like a trial and error method. You don't really know what you're going to be getting into and how much profit you're going to make, and you have to calculate your profits manually because you need to factor in, let's say if you deposit $100 into your Binance account, when you use $100, you may probably only end up getting $90 worth of Bitcoin. So you already lost $10 by just buying Bitcoin from one exchange. And then the fact is you need to put a buy order for that, and that can cost a trading fee. And then once the trade has been completed, you need to withdraw that from a cryptocurrency exchange, and there may be withdrawal fees which may be changing from exchange to exchange from time to time. And you need to move it to another exchange which may potentially have a deposit fee, and then trade it and then withdraw it again. So you have lots of fees that you'll be incurring when you're doing this on multiple different exchanges, right? And as you can see, the profitability diminishes as you move from one exchange to another, and you probably have to look at the price to see if the arbitrage trading even makes sense, because if it's only trading with a difference of a few dollars, like let's say less than $100 to $200 in difference, then it's not really worth it, because you're actually losing a lot than gaining from the arbitrage trading, right? So those are the pros and cons of manual arbitrage trading. So you may be wondering, so what other method is available to do arbitrage trading without having to do the manual method, right? So there is one method which I mentioned before. It's a decentralized application which you can use to do arbitrage trading. And this method basically allows you to do arbitrage trading without actually spending a lot of money. In fact, you don't have to, if you do it right, you don't actually have to spend any money at all, because this method actually helps you make money by borrowing money from decentralized exchanges or lending platforms, and then using borrowed money to do arbitrage trading in a fraction of a second, right? So why am I saying that this is a good thing compared to the manual method? The reason why this is a good thing is that not a lot of people will have money just lying around to do trading, right? So if you're trying to do trading and you only have sufficient amount of funds to pay gas fees, but you don't want to actually put your $100 or $1,000 or $2,000 or whatever money you have into doing arbitrage trading, you can actually use this method, which is also semi-automatic, and it's also more efficient, because this method has consistently worked for several beginner as well as amateur traders, right? So the method that I'm going to tell you guys is basically going to be through Furucombo, which is a decentralized application initially built on top of Ethereum blockchain, but now this platform is available on multiple different chains. So if you want to access this platform, you need to go to the right website, which is Furucombo, Furucombo.app. So Furucombo.app. Make sure you go to the right website, because there's a lot of scammers who try to impersonate this website. So when you go to this platform, the first thing that you will see is you obviously need to connect your wallet, and you can connect your wallet with different chains. The default chain would be Ethereum, but this platform, as you can see clearly right now, it's available on multiple different blockchains, including Polygon, Arbitrum, Optimism, and Avalanche. So if you are not interested in paying the high gas fees on Ethereum, which I completely understand, you can use this same app in Polygon, where you'll be basically paying a fraction of a cent in fees, gas fees, or in any of the other chains that are available here, which will provide you with an option to just pay no more than $1 or $2 in gas fees overall, right? So that's the best thing about this platform, where you can basically use this platform to do arbitrage trading within, let's say, $2 to $3. That's the maximum you'll be actually spending if you do it right? So now if you go into this app and you connect your respective chain, you can basically start using this app. They have two different modes. The first one is invest. So this platform basically allows you to invest in different liquidity pools, liquidity mining, and you can do a lot of crazy things when you use the invest option, but that's not really relevant to this video. So we're going to basically choose the option called create on this platform. So when you click the create option, this is where you can create your own blocks of smart contracts, right? So what Furucombo basically does is it allows users to basically break down complex information on blockchain into cubes. So you can take a cube and mix and match and create your own kind of smart contract without having to know any form of coding, which is the greatest thing that this platform has to offer. And the best thing about this is that a lot of arbitrage trading involves smart contracts, because people build bots, they build complex tools to take advantage of the price differences in different decentralized exchanges. But this platform allows you to do that by just clicking and moving blocks within their platform, right? So as you can see, there is this main central block, which if you click the plus button, you can add a particular debts, right? So the first thing that you will have to do is once you click the plus button, you need to choose Aave, which is basically the platform that we'll be using to borrow the funds from, because you don't really have any money to do arbitrage trading yet. You need to borrow the money, right? You can basically use Aave to borrow as much money as you want, provided that much money is actually available in the platform. And Aave is such a huge platform that you probably have up to $1 trillion worth of funds locked in that. And in theory, you can actually borrow all of the $1 trillion to do arbitrage trading, right? But there is a small catch, because when you do a arbitrage trading with borrowed funds from Aave, you need to return back all of that fund as well as a small fee. In this case, it will be 0.05% within the same block. Okay, so you need to have that in mind, because you can't really just borrow it and then wait for a few minutes or hours or days and then not return it back, because that's going to collapse the platform, right? So you need to make sure that when you try to borrow funds, it will automatically create a block that says you need to return the funds back to Aave with a fee attached to that. So you need to make sure that you make enough money by doing the arbitrage trading in such a way that you cover the fees and you have some more money to profit, right? So that's the main theme that you need to understand when you use Furu Combo. But apart from that, once you understand that basic concept, everything is relatively simple. So when you click the plus button, you can basically go to Aave and borrow whichever token you want that's available on Aave. In this case, we can use USDT, and you can borrow how much ever is available within Aave. Usually, most people do arbitrage trading by borrowing no more than $10,000 of USDT, but you can mix and match. You can start with just $100 or 1,000 or 10,000 or more than that. It's up to you, right? So when you borrow $10,000 from Aave, another cube automatically gets created below that tells you that it will have to be automatically repaid within the end of that transaction with a small fee. So if you borrow 10,000 USDT, it will be automatically deposited. There will be another box that will be created, which will tell you that it has to be automatically returned back to Aave with a small fee, which is 0.05%, right? So now that you created this cube and you basically borrowed, you're borrowing USDT, in the middle, you can actually add a cube that allows you to convert your USDT to another token, right? Let's say in this example, we'll say wrapped Bitcoin, because that's the most popular version of Bitcoin on the Ethereum and Polygon and several other Ethereum-based blockchains. So you can use $10,000 to borrow wrapped BTC from, let's say, a platform like QuickSwap, right? And you can buy wrapped BTC from QuickSwap, and that will give you the exact amount of wrapped BTC that you will get for that given price, right? Make sure that you do some groundwork before you try this out, because the price keeps changing, so you need to make sure that the trade is meaningful for you to do, right? And now that you converted your USDT to wrapped Bitcoin on QuickSwap, you can basically use another block to create another smart contract that allows you to swap the wrapped BTC to USDT again, but in a different exchange where you can make the profit. So let's say, for example, you can use Paraswap in this example to swap the wrapped BTC into USDT again, and this time you may need to see if there's a difference in amount that you'll be gaining. So let's say, for example, you bought $10,000 worth of Bitcoins on QuickSwap, and then you're converting it back. And let's say when you convert it back, you're making $10,100, right? So you make $100 profit because you're returning back the $10,000 back to Aave, and then you need to pay a small fee. So you're making about $95 profit. So you need to make sure that this is all done before you start using Furu Combo, because the price keeps changing and you will lose the arbitrage opportunity, right? So once you arrange the cube in such a way that you have the Aave block on the top where you borrow funds, and then you have the QuickSwap block, and then you have the Paraswap block which converts the wrapped BTC into USDT again, and then you have the last block which provides the USDT back to Aave. That's it. That's basically all you need to do. You clearly arrange the blocks, and then once you are happy with that, you need to click the transaction button, and then you need to pay the gas fees. In this case, it will be in Polygon because we are borrowing in Polygon. And once you pay the gas fees, if the transaction is successful, you will see your $100 or $200 or whatever profit you made in your wallet directly. And all you would have lost is just your gas fees, which is just in Polygon, it's going to be less than 1 cent. And you basically made money, just doing arbitrage trading on Furucombo. So you can do this on Arbitrum, you can do this on Optimism, on Ethereum, and multiple different chains that are available on Furucombo, and make a really good amount of money in the short term by doing this, right? So obviously there's a catch to this. What are the pros and cons? We'll discuss that right now. So pro-wise, this is a fully automated method. You don't have to know coding. It's it's all laid out to you. It's a pretty simple block that you need to move on the screen in order to achieve this. Very simple. The user interface is very simple, and you can basically make some good profit if you know what you're doing and if you have some background information, right? When it comes to another form of pro is that you are doing all of this with very little gas fees, so you're not paying a lot of money. You can basically borrow as much as you want, provided it's available on Aave, and you can basically borrow like huge sums of money and do arbitrage trading and make a profit without having to spend more than $2 to $3, right? Depending on which chain you use. So these are the two main pros that I see from Furucombo. And the cons, when it comes to cons, you don't really have control of which assets you can actually use. Because if you see in this example where we used QuickSwap only has a limited number of assets, right? So let's say you may get wrapped BTC or wrapped ETH, but I don't think you will get an exotic token that you may want to trade, right? Because QuickSwap is a relatively less well-known exchange which doesn't list a lot of tokens which are not available on the Polygon ecosystem. So you may be stuck with using only a few tokens, and you may not be able to use all the tokens that may have a really good arbitrage opportunity, right? Let's say, for example, a small market cap token can have a huge arbitrage opportunity compared to a well-established cryptocurrency like wrapped Bitcoin or wrapped Ethereum, right? So those are, you're basically limited to opportunities. So that's one thing that you need to understand. And another thing is that you are only limited to the tokens that are available within the respective blockchain. Let's say you use Optimism, right? Not a lot of projects are there on Optimism, so you can't really use projects like, let's say, Solana. You can't really do arbitrage trading with Solana token or Dogecoin on Arbitrum or Optimism, because those tokens don't really exist on these blockchains. At least a wrapped version doesn't exist as of yet. And at the same time, you may not be able to use the exchange that you want, because if you see for Polygon, they only have 3 exchanges, I believe 3 or 4 exchanges. The first one is obviously QuickSwap, the second one is Paraswap, and then they also have Uniswap, and I believe they also have 1inch, but you don't really have other decentralized exchanges that are available on Polygon, which are available in this platform, right? There's only limited number of exchanges that you can do the arbitrage trading from, which is also something that you need to bear in mind. And also the most important con for this project is that you need to do a lot of groundwork before you start using Furucombo, because you can't just keep brute forcing the price difference manually. You need to make sure that you go to CoinMarketCap's page to see if there's any meaningful difference in price before using Furucombo. So if you're trying to use Furucombo directly, you will spend a lot of time trying to figure out which trading pair or which token has a meaningful arbitrage opportunity, right? And that's one of the main annoyances that you'll be facing when you use Furucombo without any groundwork. So that's pretty much it, guys. So this is pretty much all there is to it when it comes to arbitrage trading. 2 basic methods. The first one is manual method, and the second one uses a decentralized application called Furucombo, which you can basically take advantage of, and it's pretty much easy plugin setup, and you can go ahead and do arbitrage trading on the exchanges that they have and on the chains that are available, right? So if you find this video useful, please hit the like button and subscribe for more videos and ping the notification bell so that people who want to do arbitrage trading can do arbitrage trading as well and make some money passively, right? So as I said, if you guys like these kind of videos, please leave a comment saying that you like this video. That will definitely help me make more videos like this. And if you want to see any more videos like this in the future, please let me know as well. Or if you have any suggestions, please feel free to leave them in the comment section, and I will let you know if you are one of the lucky people whose videos have whose ideas have basically used to make another video, right? So let me know, guys, and I'll see you guys in the next video. Bye.